Hey everybody, Trader Tim, E-mini Mind, bringing you another Monday market analysis. Today's Monday, June, no, that's not June, it's July. July, what is the date today? Today is July 27th, 2015. Our widening formation here on the ES is coming to fruition. As you can see, I'll throw up some trend lines, but it's pretty easy to see how we started at an apex and we have made a lower low, and then we've kind of double topped, made a lower low once again, triple topped, and now we've broken the 50% and we're looking to come back down to this 2039s and looking to break these swing lows. You know, after 3 tests, 1, 2, 3, you can even count this little guy back here, 4 tests, we have not been able to break out into that 2150 level as we were using as the target. Now, what that means is we could have some big potential selling and very exponential selling, and that as soon as we start to break lows, we'll really start to break lows fast. And so, you know, we've had some big string of selling days in these last runs down. If we look at the SPY, you can see increasing volume with the move down, decreasing volume with the moves up. It's just all of the signs are screaming lower at this point. Now that doesn't mean we certainly couldn't go higher, but we've had so many opportunities. Buyers have stepped in 1, 2, 3 times and pushed the market up, but there hasn't been the follow-through to break highs. So I don't think, let's do this. I don't think that there's a great chance that we'll get a halfway back here, meaning that I think we'll come and touch 2039s before we get a retracement from highs to lows. At this point today would be 2091s, but I'll leave it out there for a short that does take us down into that 2040 level. So you can see how the negative 23% target lines up nice. Well, I would want to either get short or long, and the way that I determine which one to take is whichever one trades first. So if we come up and hit 2091s, boom, the short triggers. If we come down and hit 2040s, boom, the long triggers. Now the long, I'm not going to take a blind limit order. I'm going to look at the 15-minute chart and even drill down to the 512 tick chart and look at what's going on. Are we getting low, nicey ticks at the same time that we're touching 2040s, and see if, you know, maybe there's a potential we can get another V-shaped rally off of a big hammer off of this 2040 levels. But at some point the rubber band is going to snap and we're going to what it looks like break these swing lows. So watch out for that. A couple trade setups in the euro I wanted to talk about from today, some great examples. If we go to this morning's trade, you can, I'll zoom back up a little bit here. So we had a leg up most of the overnight session and then a small pullback. So if we come to the morning session, the morning US session, we're kind of moving lower, and you know, these setups up here are not really great opportunities to get short. You can see they're a little bit dirty, meaning they break through the negative 61.8, and you can see how this low does not break the swing low behind it. Same thing up here. You know, while they do give us a pullback, they're a little bit dirty, meaning they break through the 61.8, and it's because we did not get some follow through with breaking a swing low. Now, if we flip that around, here we are moving lower, and this high broke the previous swing high. And you can look, and it's a much cleaner setup. You know, we did trade in a few ticks, or a few pips rather, but 1075s traded up to the target and even up to the negative 61. And then we pulled back the next setup from lows to highs. Now this one pulled back and retested the 50 a second time. So with this trade, you know, I'm trailing as we're moving higher. Once we break out, my stop is a little bit tighter, and so in this trade, it's taken out up here, and so I didn't get to see the move go all the way to the target. But you can see that, being taken out of a trade or moving your stop once we break the previous swing high, it's a nice way to lock in profit. And then you don't have to sit through all this pullback. What if the market pulled back and didn't break up to its target? So taking the first two setups in the new trend is really where the highest probability is. You can see the first one went really quickly, and if you're trailing your stop, it's just a matter of trailing each candle. And as we get up here and kind of move sideways, we're already at the negative 23 target. That's good for 20, 30 pips, and then the next trade was, I think, 17 pips before getting taken out. So some good moves in the euro, and clean moves, meaning they're going from point A to point B very quickly. The setups are clean, they're nice. You're not getting faked out. This whole move lower, we really didn't break a significant swing high. You want to see a handful of green bars and a handful of red bars, and you can see back here, we have a couple bars in a row and then a couple bars in a row. You really want to get a market that is, using the Heikin-Ashi for these examples here, a market that's moving in nice, clean, green then red, green then red. And even if going back to the early morning session, you see nice, clean moves higher, much of consecutive green bars. So the euro's looking good. The ES and the US stock market is looking a little bit shaky. So we'll see how, you can look at, like we've been talking about, the Googles and the Apples. If Google is coming back down to fill its gap and Apple is not looking very strong, then these are the stocks that make up the broader stock market. So those are the stocks that are heavily traded, and so those can kind of be leading indicators towards what the broader market will do. So that's what we're looking at for this week. As always, if you have questions, feel free to shoot me an email, tim@eminimind.com. Or if you have ideas or suggestions or things you'd like me to incorporate in a future video, feel free to shoot me a note on those as well. So thanks a lot. We'll talk to you soon.